So I would have my stops above this volume imbalances here, maybe above this high, depends on what you do. If you want to play it very safe, you put it over here where the standard deviation is. But I most likely would put my stop above this volume imbalances because I think they are now no trespassing areas anymore, so price should not go over there. But it's no problem, you can have, so you see you have here, you have the 0.5 standard deviation level, and you have the ADR, DR, and the IDR from the ADR. So this is a very nice cluster where you can put your stop above if you want to be on the safe side. Something like that, yes? So depends on where your target would be. Let's say over here, for example, just look that you always have a 1 to 2 risk-reward ratio. But for me, I would put my stop directly over here because I think if price comes over here and maybe goes into this fair value gap back inside the 0.5 standard deviation, I rather get stopped out here and would re-enter here because I will get a better risk-reward ratio, right? So if you watch the part 3 video, you can see that I'm telling when we expect a range expansion model, what are the rules I'm saying? What are the rules for the range expansion model to the upside or downside? Yes, 0.5 not broke. So what are we seeing here? So if we want to expect a range expansion model, we want the ODR to not be below the 50 midpoint. And we don't want to see price close below the midline. Exactly. So that's why even when just when the ODR is already ready, we are not expecting an upside expansion model. So then we look to the left of our chart and we will see the. So this is IDR level, RDR level from Friday's price action. So end of the week, last week. We just draw out this line and we draw out this line. We also see that the 2.5 standard deviation plus the opening price plus the IDR level plus the -1 standard deviation from the actual RDR, the -2, that all of this is clustered here. So we draw this out and look what we are seeing. So already during the ADR session, we already see a rejection from this level. Then we are looking closer and we see the 1 standard deviation level is lining completely up. Then the ODR starts, we are getting rejected again from the same levels and from the 1 standard deviation. Price comes down, here's a volume imbalance if you don't see it. So you already know when it's going up, there is a high chance that we will see this level again. So we are going down. We are coming down to the open price of the ODR, sorry. We go up and we go down and we're confirming. We are confirming short. We are rejecting up from the 0.5 standard deviation level and see what is in here. A volume imbalance. So we are going up. We are not able to go to the 50% level. We are going back into the volume imbalance, go down, and reject from here. So that's where I took my trade in the afternoon session. So I went short here, stopped below the open price, and my target was the next standard deviation level, which was here. So taking profits, partials over here and partials over there. So the idea, or what you can see here, is just the clearness of what we see. So even if you don't take this trade, even if you don't take this trade and you don't see it, it's still, you have to understand, see, and learn that. Here, by the way, again, another volume imbalance, beautiful rejection 3 times out of it. Price goes down, and look what you see. What is not in there? In this price movement, what are we missing here? You see any volume imbalance here? Except this one. Yes, exactly. So price movement, when we go up, we see volume imbalance here, everywhere where we go up, there are volume imbalances. That gives you a hint about the direction where we're really going. So no volume imbalance. Here, the first volume imbalance of the down move. Price action is closing it. Here we leave another one. We are closing it immediately with the candle afterwards. And price goes down. We have a small volume imbalance here, immediately gets closed with this candle. We are going down, another small one gets closed immediately. We go up. What do we have here? A fair value gap. So what is the interesting point on this fair value gap? First of all, we have this. I don't know why it's not showing my standard deviation here, by the way. There should be normally a standard deviation level here. Anyway, not so important. So we are returning into this fair value gap, and we have another volume imbalance over here. So this one is created in the retracement to the upside. So we are going up, we are retracing, we are rejecting from the fair value gap over here. And you already know once we reach here that it's highly possible that we will return to this volume imbalance. So you have a fair value gap, you have your confirmation for short. That could be another entry into a short trade for the ODR. Price goes down, makes a new low. What do we have here? Surprise, surprise, another volume imbalance lining up over here. What we have here? Another fair value gap. Another fair value gap. So price makes a new low, retraces back again. And what is here? Another volume imbalance. So price goes up. What do we expect here? We are rejecting 2 times from this volume imbalance. And we are coming down and we are closing inside the fair value gap. We are closing the fair value, the volume imbalance over here. And then just price plummeted down. Here's another one. And from here on, just market goes boom down. Next volume imbalance gets filled over here. So now we are in the RDR session. Price doesn't stop. It's closing this small volume imbalance over here and then continues to go down. So this is our gap in the future from Tuesday to Wednesday, I think. Like from Tuesday close to reopen at 6. So, and we talked about this in Discord. So price goes into here. Look at the 0.5 level. We see reaction over here. Price goes down. And look how price is behaving inside. So I asked in the chat, I was like, anyone sees a long rejection over here, or it's more a short rejection? What would you say? That's a good question with the stop loss. So I see short rejection. So price goes down. I have to go back because people were asking where to put stop loss. So if I would enter here in this fair value, so I would have my stops above this volume imbalances here, maybe above this high, depends on what you do. If you want to play it very safe, you put it over here where the standard deviation is. But I most likely would put my stop above this volume imbalances because I think there are now no trespassing areas anymore, so price should not go over there. But it's no problem, you can have, so you see you have here, you have the 0.5 standard deviation level, and you have the ADR, DR, and the IDR from the ADR. So this is a very nice cluster where you can put your stop above if you want to be on the safe side. Something like that, yes? So depends on where your target would be. Let's say over here, for example, just look that you always have a 1 to 2 risk-reward ratio. But for me, I would put my stop directly over here because I think if price comes over here and maybe goes into this fair value gap back inside the 0.5 standard deviation, I rather get stopped out here and would re-enter here because I will get a better risk-reward ratio, right? So, and the same goes with this one. Like if I would use this as an entry, I would have my stop either directly above the volume imbalance or up here. That's how I would trade. If I would have taken one of these trades, that's where I would put, yeah, that's where I would put my stop. Yes. So if you see an expansion like that, if we have really a strong trending session in the market, DR session, what you want is that price is respecting also market structure. So the highs should be respected. So as you can see, and that's what's happening today or was happening today, that price is not coming over this high. So we're going lower and lower and lower with the high. So this is only happening on strong trending days, but that's something I always look for. So that's why I would put my stop up here, because like if we go above this high from here, I would expect higher retracements. Say if we go above this high, I would expect price to go higher, maybe even up to the DR levels again. But that you don't know. But in your head, you have to ask yourself, if you're looking at the price action until here, do I expect a more trending downwards phase? And for me, I see this, I would see that. So I have my low DR and IDR levels over here. And there's only one way. Either here we will go up, or if we close below these levels, it's the same like up here. Then I expect more expansion to the downside. So the DR levels are always helping you in your decision making because that's really my thought. So I'm thinking, okay, either this holds and we see a rejection and we go up, but I don't trade it long because my confirmation is short. So I'm anyway only looking for a short trade. But I also say myself, should we close below this line here, which is this DR levels, it's the same up here. Then I'm expecting more expansion to the downside. They are respected in every time frame. Is that clear what I mean? So I'm handling these levels the same way I would handle the ODR, DR levels. So I'm looking at it, I'm saying, okay, either rejection and price will go up, but I'm not interested because I have a confirmation short. I'm only looking for short trades. And should we close what we do here? Should we close below this line? I'm expecting expansion to the downside. And then I'm checking again. I'm checking price again. Where is my next level? I look to the left side. Next level, I check. Here, no reaction, expansion coming. I'm looking at the opening over here. No reaction coming, more expansion. Here, the most important level, I guess. So I'm looking at this level and I see, okay, rejection, rejection, rejection. So I'm waiting. That's also happened in Discord where people were like, okay, we are rejecting from here. I said, be careful because everything you see up here talks short. Anybody shorting somewhere over here, it's a mistake. It's wrong. There is nothing bullish inside here. So if you think we are rejecting from here, and we are so close to the DR session to start, the RDR session, you need to wait if this box is extending to the upside. If that would be the case, yes, any retracement here you can take early. But that's what I said in Discord. I said in Discord to everyone, I said, please be careful, don't catch a falling knife. This is telling us nothing right now. Even we see the rejection, we are close to 9:30, we are opening the RDR session, wait for the RDR session. So I'm looking at this price level, that's like a target which you can use. So as we see, we are spending some time over here, not able to go any higher, not even reaching any fair value gaps over here. And then we just go down and we are reaching the next standard deviation level of 0.5. We see another small reaction. So it holds. So that's what I'm doing. That's like very mechanical from how I'm working, but that's all I'm looking at. I'm not asking myself, hey, master, what you're expecting from the market, expect it to go down 500 points, 100 points. But I guess now we can have, like, you know, when I see this, I use them from time to time. But it's a very dangerous, where is it now? Yeah. So when people take their charts and they do this, I do this from time to time, but just to showcase my thought process. But a lot of people, they draw something into the chart and they fall in love with the scenario they want to have or what they see. I'm not handling my mindset, my psychology when it comes to trading is not allowing something like that. I have an idea what market can do, but it's decades away that I try to pretend to know what the market will do next. And that is paying me big time. So I'm trying to be as realistic as I can be. And for me, that means look to the left of the chart, check the levels, something happening, yes, no, okay. Breaking down, more expansion. Next level. Breaking down, okay, more expansion. Breaking down. Next. And then we come to this IDR level and the 0.5. So I look and I wait and I see, okay, we're trying, but we are breaking down again. Next, interesting, the gap. I'm looking, something happening, no. Rejection more, I see this more rejection from the downside to the downside. So we go down lower. Next level I'm looking at, -1. What is happening? Rejection to the downside. So I know we are coming down. And now we're coming to the point. Now I see a volume imbalance and I'm like, okay, I'm marking this out. Now we are coming down to the 0, but to the -0.5 standard deviation and to the open point of this RDR session over here. And now we will look closer at the price, that you really understand why I take a long there. Because this was the first clear rejection from a level which I have seen. On top of it, I said were close to finish the DR session. So that's the reason why I took it. But like all the way down from here, you have not seen such a rejection from a level. So that's very important to understand. And if I'm right here, I'm making a big trade. It's fine. If I'm losing one trade, like in my mindset, it's okay. If I get stopped out with this trade, it's highly likely that price will close below the DR levels, which gives me confirmation for short, and then I will just look for short. I'm not worried about losing 1 hour. I don't care. I know I will make it back today, tomorrow, whenever. Most likely today, and I will make more than I lost. But like from the mindset perspective, it's just like, okay, price not even is able to reach up here. So I lost this one, and that's it. And as you can see, oh, price, nice, comes over here. Let's see how we will react over here. And then this one you have seen already in the SPX. The difference only between SPX and the ES is that we are having our rejection from the IDR levels while everything was happening inside the SPX already at the DR level. But it's same story. We come down, we confirm, we try to close above, we close above it and immediately get rejected. Price goes up, and here we are not able even to close above the DR. Coming down again, trying it again. Rejection with the wicks from the IDR, close below the DR. 1, 2, 3, 4, 5, 6, 7, 7 candles. Getting rejected here, and that's where we took our short trade. And then price comes down. Here was sell side liquidity from over here, which is also a DR level, RDR low. That's why I took a partial, just in case we should reject. And then we go down, that's the 0.5 level. We are going down, 2.5 minus level, nothing reacting. We are going down, 3 level, no reactions. And we go down to the 3.5 level. And that's all. I mean, it's as simple as it looks like. And if you look at this is a volume imbalance daily chart, so that's all the daily volume imbalance I drew out by hand. So they are all from the daily level. And then I switch to the 5-minute chart. And you can see 3.5 level reaction. So that's where we came from. When you look above, that's the ODR. So look where all of this is happening here. ADR session and ODR session. What I gave you with all the standard deviation, but like look at this. And these darker areas, it's just there is where volume imbalances are overlapping on the daily chart, right? So that's why they are darker, and the darker the area, the more impact it will have. It's like a heat map. But still look at what price is doing and what it's doing inside these areas. So we're going down and see first reaction we have, the first real reaction we have around volume imbalance. Then we go down, and that was where we were looking at it. And Discord was saying, okay, should we take a long or not? Look at this. So you have your RDR and you have this one. So look how it's rejecting over here. Tuk, 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 tuk. Then we go down, price rejects from here and gets rejected from over here, all in confluence with your RDR. We are coming down this area, we are not able to close above that, and we're going lower. And we are coming down. This was the area, another confluence for my long trade. inside this volume imbalance on the daily, the 1.5 standard deviation, all of this on top. I tried it. We are going down. We are closing below the volume imbalance and then get rejected from the upper side of the volume imbalance. And see how we are ping-ponging. So going down and getting rejected from this one. And then our short comes, look at the reaction here. And we are going down, we are closing below this volume imbalance, we are going up, getting rid to the tick, and we are going down. And there is no single wick on the way down. And look where we're getting wicks here. And look where. And then we go lower. Again, next reaction, down here. Fake low, and from there on, we are switching gears. So, yeah, that's all I can say about today's price action. And again, like when we drew this, you have seen from when this is? It's from 10 o'clock in the morning. I mean, isn't it crazy? I think so. Yeah, so let's check this. Beautiful. Surprise, surprise. Yeah, questions? So, and I really need you to go. Now is time. There's not so much happening. Maybe you will find some time during Christmas. I really need you to study. I can't really, it's impossible for me. It's not impossible for me, but it doesn't make sense. Because if people ask me all the time, must explain the models, it's literally take your chart, take time and look every ADR, ODR and what is happening. That's all you have to do. You go through your chart, you see a model like this, which is happening very, very rare. It's maybe happening once, twice every 2 months. But like this is the contraction model. So if you see that, you can expect a bounce to the downside or to the upside in the next session. There's so much in there. I will make a video later on, but I really want you to study what I'm talking about. Because even if I tell you the models, you need to find, look at this, you need to find your confidence. If it would be not 12:34, I would most likely think about something here, but it's too late. It's not worth it. You just have to really come to the point where you understand and where you have so much confidence that you're able to pull the trigger. That's the most important. Pulling the trigger here, pulling the trigger in the ODR session, pulling maybe the trigger in those trades if you miss those ones because you're coming too late. But that's what you have to train, and you train that with look at it. And it's not like search and search, it's like the model, the DR model is very quantified. So you know exactly what you have to look for and which areas you have to look. Like I explained, I'm looking to the left and I'm saying, okay, do I see something here? Yes. So I take a partial. Do I see something here? No. Price extends more. Do I see something here? No, I just see a rejection to the downside, and so on and so on. And then we are turning around. So here I see that, I see a structure break. And look, even the long, which we not even talk about, I didn't lose a word about how you can counter trade with RDR. But like, look at this. We are rejecting from here, market structure break over here, And then what is happening? We are going above next structure break. And now we see a rejection from the standard deviation level. Again, again, again. So there's so much more, but like you really need to study it. Volume imbalances, they are happening in DXY, but not so much in the currency pairs. But like the point, you don't have a real data feed. So when I switch to Forex, so DXY has it, obviously, because it's a future. But for example, here you see there are no volume imbalances. So, but the problem is this is not a real data feed. It's yeah, like this is just a broker feed. So we would have to look at the real Forex feed, like maybe an institutional Forex feed, which we can't access on TradingView. But it's working perfectly fine in the DXY. Gold also doesn't have a lot, but that's also not the real gold future I have here. Bitcoin, same, it's Binance, but there we have some. Nice. Zack, zack. Wow. It's amazing. I love it. I just look at this. Now we are filling this one. There's another one over here. It's just beautiful.